Curious about which TradingView indicators can boost your trading success? Stick around, you don't want to miss this. Let's dive in. Go to Indicators tab and search Keltner Channel Bands by TradingView. We are only going to need one indicator for this simple strategy. The Keltner Channel Bands is a volatility-based technical analysis indicator that creates a channel around the price of a security to offer traders a visual representation of the security's normal price range. This indicator consists of three components. Middle line acts as a reference for the average price. When the price is below the middle line, the market is controlled by sellers. When it is above the line, it is controlled by buyers. The upper cloud acts as dynamic price resistance and can turn red to reflect how overbought the market is. The lower cloud serves as dynamic support. When it turns green, the market is oversold. Signals: when the price touches the upper or lower cloud, a tiny red or green triangle appears on the charts, signaling a potential price reversal. However, not all of these signals have high accuracy. For this strategy, what we need to do first is identify a trend. In a strong downtrend, the price usually breaks below the cloud, and the cloud turns green. It is important to see signs of bullish momentum before looking for these fake breakouts. The first touch of the upper cloud after a strong sell-off is one of the best signs. This tells us that buyers have finally stepped into the market, pushing the price up. Once we have that, it's time to look for a fake bearish breakout. These candle bars have a long lower wick. There also must be a buy signal present at the same time the breakout occurs. Now, draw the line from the latest green triangle to the current one. If the line is pointing upwards, all the conditions for a long entry are met. If the line is pointing downwards, simply skip the trade. A good way to go about money management is to move the stop loss to break even once the price closes above the middle line. Close the position manually once the candle bar breaks above the upper cloud. This way, you can catch really big chunks of the trend. Now, let's look at the example of a short trade. So the first step is to identify an uptrend. During a strong uptrend, the price usually breaks above the cloud, and the cloud is red again. We need to see signs of a trend reversal first, such as the price returning to the dynamic support zone. Only then will we start looking for fake bullish breakouts. Once we spot it, draw a line from the latest red triangle to the current one. A short trade is valid if the line points downwards. Apply the same money management rules as for long trades. Watch the next video for more tips and strategies to boost your profits. Subscribe.